Today's video, what I want to talk about is 3 things you can do to reduce your national insurance bill as an employer. So I'm not talking about employees' national insurance, I'm talking about the employer's national insurance that you pay on hiring staff. So this is really relevant because from April, there's a few changes happening to employers' national insurance. And the first one is essentially that the threshold at which you start paying employers' national insurance on your staff salaries is going down to £5,000. That means you're going to pay more national insurance on a larger part of their salary. And the second one is that the rate of national insurance for employers is going from 13.8% to 15%. There is a good thing as well about the employment allowance going up. So a lot of people may actually save money on their employer's national insurance bills. But let's go into this video. So 3 things you can do to make sure that you're paying the least amount of employer's national insurance you can get away with. So the first one, it will sound so simple. I've seen a lot of clients come over from other accountants where they weren't claiming it. Claim your employment allowance. The employment allowance is £10,500 from April that you can write off from your employer's national insurance bill. So if your employer's national insurance bill was £11,000, you can write 10.5 grand of that off and only have to pay £500. So it's incredibly valuable. So if you're entitled to claim it, then definitely claim it. And also, if you're not entitled to claim it, ask the question, how can I be entitled to claim it? Because you may find just by making a few tweaks, especially if you're a sole director business, and you may have someone else involved in the business but isn't necessarily a director or on the payroll, just by making a few changes to that, you might be able to qualify for that employment allowance anyway. So the second thing is you can actually hire people who are under the age of 21, and instead of paying employers national insurance from after they've earned £5,000, for under 21s, the employer's national insurance doesn't actually kick in until they make £50,000. So that means that someone who's under the age of 21 can earn a lot more money before you have to pay any employer's national insurance on it. Most people under 21 don't earn more than 50k. So if you're hiring 21-year-olds, the chances are you probably won't have any employer's national insurance to pay on their salary anyway. And then the third thing you can do, whilst it might not be that practical, it's definitely still worth considering. When you've got a job and it's possible to split that into 2 jobs for 2 people, then you will save some employer's national insurance on that. What I mean by that is if you had a 40-hour role and you think you're in a position where you can turn that into 2 20-hour roles for 2 different people, then each person gets their £5,000 threshold before you start paying the employer's national insurance. So then you get 2 lots of that £5,000 threshold, which means you then pay less employer's national insurance.